amounts owed. How much is owed on all things that are open? Now, I've got a lot of things that are listed in my credit history that say zero, but they're mostly in an inactive status. The specific type of accounts, how many accounts are open and how many have balances, and how much of the total available is being used. That's probably what most people should be concerned with. And that translates into one word: capacity. Or in the retail world, that was open to buy. Take for instance, you have credit available on all cards that you have, or maybe a revolving type loan, anything that's open that you could add to, of $10,000. But you only owe $2,500. Well, that's 25% of your capacity. That's very low. It's say 30% to 40%. You should keep it below that, where it doesn't affect the score. As opposed to, I have 10,000 available, but I'm at 7,500 that I owe. I'm at 75% of my capacity. That is going to affect the score. If you've gotten into that range, you have credit cards, you're not asking for new credit, it still has an impact on the score because you have changed. Something has happened in life that you've not been able to pay, that keep paying those so they're down at 2,500 level. You have increased your spending. Yes?
I'm a little bit confused. So,
Understandable.
is it that you should, I mean, I've heard from someone else that having open credit cards is okay because if you have a lot of debt, you know, like if you reach close to your maximum limit and you have other cards open but it's not being used, that it puts you in a better position than if you have just the cards open with your debt almost close to the maximum that you're allowed.
Yes.
So I don't know which.
It is better to have the open accounts that you have not maxed out your capacity. Because if you're at 75% or greater of your capacity, then yes, that is a bad thing. As opposed to having several cards, $10,000, but you're only using 2,500 of it. That's only 25% of your capacity. This has not always been. I can remember when we were refinancing our home, and I'm talking like mid-90s, 93, 94, and the lender was concerned about the number of cards that were there, because that could mean, well, my goodness, you could go on a spending spree and max out everything that you have, and that was looked at as a negative, but that has changed. It's how you handle your credit over the course of your credit history.
So, in short, you just keep your cards for your paid off accounts. Don't go ahead and close the account
Right.
if you don't have it.
Exactly.
And then if you apply for a loan or something in your specific credit union, says you have too many cards open and closing as part of that application process.
Exactly. Very good point. Did everybody hear that?
No.
Okay. If you were applying for a loan and your lender sees, well, you've got all these cards, before we will advance you this loan, we want you to do a little house cleaning and close up some of these accounts. Yes, you could do that because the lender is using that as one of their guidelines for advancing you the money. Now, that is going to have an impact on your score. But the lender is already saying you can have the money, but this is the guideline that we want you to follow for us to give you the money. It'll impact your score, and then the score will come back.
Some of the lending institutions are already closing those accounts for you.
Yeah, they are, and then and raising interest rates. That's what I'm trying to say. Yeah. Well, they're trying to change their bottom line as well in these hard times. Length of history. Yeah, they're doing a lot to consumers' bottom line. How long have you had history? generally, the longer you have, the better your score is, but, you know, if you've not paid things on time and you've been, late and you've done that, that's not gonna help your score just because you've had credit for a long time, because you could have a bad score and you'd be, 20 years with a credit history. How long the credit account's been open, because they look at an average age. And you want the average age to be as old as possible. If you have old accounts, but lately you have asked for new credit, then that drops the average age, makes it younger. You want it to be old. It impacts the score for 6 months or long, or about that time, but then it will come back. Transferring balances, I get this question a lot. Transferring balances from one account to the other is okay, as long as those are accounts for things that you've had. But if you're opening a new account and transferring balances to that new, you have changed your history length, your average, and it all depends on what you're trying to do. If your goal is to try to consolidate and get out of debt, make it as quickly as possible, then don't be so concerned about what your score is. But if you're concerned about keeping your score because you see a purchase in the near future of a large item, mortgage, car, whatever, then you want to be careful about opening new accounts. If you have available on something that you had and you had available and they send you an offer now to transfer balances, the account that has been going into it, it's not going to affect the score one way or the other because it does change your capacity by a tremendous amount. Yes.
I noticed that a lot, especially now, a lot of your retail stores, as you make purchases, they're offering you a discount on the purchase if you open a credit card. And I guess a lot of people don't understand that every time they open a credit card, it's going to lower their credit score.
Yes. 5, 10 points.
Yeah.
At a time, right. And we're going to get to that inquiry in 2 more slides. Okay, next is the types of credit. They do look at, and it's a small percentage, 10%, that looks at the mix of credit that you have. You have credit cards, you have some installment loans, which are cars or mortgage. You have some retail accounts, the ones that offer you the 10% off your purchases today, but charge you, 25% on your carrying costs, and mortgage. If you don't have all these, doesn't mean you go out and get them, because it's a 10% of the mix and factoring in. It's a small amount. I have to brag, I don't have a mortgage as of July of last year. Okay. So, at some point in the future, that's probably going to affect my score, but I'm not worried about that. I don't have a car loan, so I don't have anything on the mix right now that is an installment type arrangement. All I have are some credit cards, but I don't use them, So, but you do need to keep throwing things in. You do need to use the cards that you want on a pretty consistent basis. Every few months, charge something, $25, $50, to keep it active, to keep the information flowing to the credit agency. Because after a 6-month time frame, if you haven't purchased anything, then the creditor doesn't have any information to send to the credit agency. So then it falls into an active status.